My name is Rick Blanke, Managing Partner of Blanke Schein Wealth Management, and welcome to our next installment of our Financial Foundation series. This is actually a part 2 to our guide to first-time home buyers. In the first part of this mini-series, we talked about assessing your financial situation. We looked at how much mortgage you could qualify for, and we also took a high-level view of the pre-approval process. In this part, we're going to take a little more granular approach, and we're going to look at things like the down payment. We're going to look at what lenders are considering. We're also going to look at the importance of a home inspection and also touch on closing costs. Understanding your down payment is extremely important. This is the largest lump sum that you're going to have to pay. Traditional advice would say to put 20% down. That way you avoid the PMI or private mortgage insurance expenses. But many first-time home buyers put 10% or less down, and they do so through government-backed mortgage facilitators. These are called FHA loans, or Federal Housing Administration loans. And for qualified individuals, you can actually put as low as 3.5% down. FHA loans have grown in popularity over the years. In fact, in 2018, over 80% of FHA-backed loans were for first-time home buyers. It's important to remember that the government doesn't back these FHA loans for free. FHA loans come with 2 additional types of mortgage insurance: ongoing and upfront. Upfront mortgage insurance ranges from 1.3 to 1.5% the price of the home. This is called the upfront mortgage insurance premium, and that payment is rolled directly into the mortgage itself. The ongoing mortgage insurance is a little bit different in that it's paid each month as a part of the mortgage. This payment amounts to 0.45% to 1.05% on the outstanding mortgage balance. So this premium will decrease year over year as you pay off your loan. It's a good rule of thumb to have at least 10% of the home price up front, no matter what loan you're using. The next point to touch on is the debt-to-income ratio. Your lenders will calculate 2 different measures, and all these numbers do is show how much you can comfortably afford to pay each month. It's also important to note that your mortgage payments are also referred to as PITI, or PITI. And this consists of principal, interest, taxes, and insurance. Those together will make up your monthly mortgage payments. The first DTI calculation, or debt-to-income ratio calculation, is called front-end DTI. And this simply takes your expected monthly payments towards PITI and compares it to your gross monthly income. The second DTI calculation is the back-end DTI, and this takes PITI, remember principal, interest, taxes, and insurance, and it adds in your current debt load, so think student loans or credit card debt, and compares that to your gross monthly income as well. Another point I wanted to briefly touch on is the importance of a home inspection before you buy the house. In today's current real estate market, we're hearing stories of people waiving a home inspection. It is really a good thing to do. You have someone go in, check out the roof, check out the exterior walls, check out the air conditioning units, make sure there's no mold in the house. All these things can add up to big expenses down the line. So it's important to get that checked out before you actually buy the home. The last topic to touch on is closing costs. This can vary drastically depending on which state you live in, whether it's a high tax state or not. But the national average is anywhere between $3,000 and $7,000, but it can be, more than that. Lenders can provide great insight into this area. Actually, lenders are required to provide a loan estimate, or LE, within 3 days of the lender receiving a mortgage application. And this will show the best estimate of the total cost breakdown, including the closing costs. In addition to the loan estimate, 3 days before closing, the lender must provide a closing disclosure. This will show the loan estimate figures from before, as well as the actual closing costs. Thank you for watching this video. I hope it helped. If you have any questions, I'd love to have a conversation with you. Please reach out. The link below. Give us a call, shoot us an email. We'd be happy to discuss your personal situation, and we're here to help. Thanks.